Well, Tech Mahindra came out with an outstanding set of third quarter numbers. The management about to start addressing a press conference. Let's cut in live.
Not such a large slide. Dollar has gained huge strength. The Chinese currencies also under pressure. And in all this, Indian rupee has marginally strengthened. So if you're looking for a change, we have been having it on the weekly basis. Despite this volatility, I do believe our results are not too bad. We are reporting sub 3% quarter-on-quarter revenue growth in US dollar terms for the first time since merger. However, the underlying fact is that we have grown by almost 5% quarter-on-quarter in constant currency terms. The adverse impact of currency was about 1% in Q2 and now 2% in Q3. Increasingly, we believe that this will be the factor which will continue to impact growth going forward at multiple levels. But what we would want to focus really on is growth of business in every region of our choice. And that has been happening. That their currencies have moved and they reflect differently in dollars is a matter which we think is incidental. So we have grown in Europe, though in terms of dollars it will be seen as less. Now, given this scenario, what does the global economy look like? In fact, I am for the first time quite optimistic about Europe because devaluation of their currency is the right adjustment. It should have happened earlier. And this will make the exports more competitive. And if they come under fiscal pressure, which are bound to, it means that insofar as the Indian IT industry is concerned, it's good news because they will be buying our services in a larger measure. And in any case, such economic traumatic movements help economies which have fixed norms and rules to readjust, and which gives them the reason. So, whereas everybody is pessimistic about Europe, I'm getting a bit optimistic for the long run. Now, let me touch briefly upon the quarter numbers. Briefly, our revenue was for the quarter two was 5,752 crores, $924 million, up 4.8% quarter on quarter and 17.4% on year. EBITDA margins inched up by 20 basis points and were 20.1% for the quarter versus 19.9% in the previous quarter. Margins improved quarter on quarter on account of greater utilization, while adverse currency and provisions pulled down the utilization benefits. Profit after tax for the quarter was at rupees 805 crores, which is up 11.9% quarter on quarter. And what is perceived as the good news, the board has approved a bonus in the ratio of 1:1, followed by a split of 1 share of the face value of rupees 10 to 2 shares of rupees 5. During the quarter, we announced the acquisition of LCC and the merger of MES was consummated. MES added about $10 million to our revenue line during the quarter, while we anticipate achieving financial closure of LCC deal in February 2015. CP will be talking at greater length about the LCC deal, but we find that, at least I personally believe, that this is a promising and an exciting move on the part of our company. We are getting into network area. We were there earlier, but not in such depth. So we think we have, not only with this, we will have access to the market, which was not our forte earlier. Net, I'm quite pleased the way we have performed in the previous quarter. I think we have created a decent base, and we should see the dividends of it next year. CP?
Good evening, everyone. I think Vineet has very eloquently summed up the overall perspective and the situation, and I can only say that, considering that we normally consider December quarter to be a weaker quarter on account of furloughs and on account of some of the forced leaves, company turning in close to 5% quarter-on-quarter growth in constant currency and 2.9% quarter-on-quarter growth, taking into account all the currency fluctuations. I mean, I don't have to tell you that the British pound fell by almost 8%. Euro has fallen by about 17%, Australian dollar by about 11%, and you also know that Tech Mahindra is one of the few companies which has really a 50-50 split. This quarter actually 45% would be US, and the rest of the world, including Europe, would be 55%. So, in general, we are quite happy with the growth. We are very, very happy that some of the market initiatives that we have taken, as you would recall, the market initiatives are all built around our differentiators on NMAX. Some of us, both Vineet and I, were in Davos. The two subjects which were the underlying thought with every industry were digital economy and the cyber security. And NMAX, network, mobility, analytics, cloud and security clearly shows that your company, the step they had taken, and particularly the way we are engineered. I mean, all our solutions, whether it is in Comviva, whether it is in CanvasM, or whether it is, our enterprise acquisitions or the network acquisition, they only tell you is that we have only strengthened our market reach in digital enterprise solutions, our market reach in Internet of Things, and where some of the solutions that we have for BFSI or retail or healthcare, will only come in handy as the market grows towards more devices, more wearables, more sensors, more connected world, and more connected solutions. From an overall performance perspective, our verticals, particularly manufacturing, BFSI, retail, travel, transportation, have driven the growth. Manufacturing has been up 14% quarter-on-quarter. Our growth in BFSI has been 3.6%. Retail and transportation have grown about 5.4%. Our telecom communication vertical has been relatively flat. It's grown 0.6%. But in general, I would say is that what is particularly I'm happy about is our growth has been across not only many sectors, but it has also been across the geographies. Americas have grown about 2.2%, Europe has grown 3.2%, rest of the world has grown about 3.2%. So overall, it's been an all-round growth. As you would have noticed is that this particular quarter enterprise business has grown slightly faster. We also signed 2 large new deals. We announced them, one in the airline industry and similarly, I think from our perspective, we are quite happy that there is a steady and a large deal closure. Overall, the deal pipeline and the funnels are looking good. We do realize that the market is shifting, and the market is shifting towards, taking into account that it is no longer about just delivering IT. It is really more about delivering solutions. It is more about, working with the companies on 3 spindles. Number 1 is on their growth opportunities. Number 2 on operating efficiencies. Number 3 is on governance and compliances. Each organization that we deal with, and as I said in the past that, considering that our geographic footprint is all over the globe, our geographic footprint takes into account on new solutions, and we have solutions like digital farming, we have solutions like farm to fork. All of these help the companies that we serve with to come in with the new markets. So overall, as they say, eventful quarter, decent results, and eventful because we closed on these 2 acquisitions, though they will formally get integrated sometime in February. LCC is expected middle of February. SoftGen to be completed after all the regulatory approvals by end of February. But both the teams have started talking to each other. Both the teams have started engaging with each other. And frankly, both network services and BFSI will get a huge boost, because of differentiated service offerings, new platforms, and our capability to serve a lot of new markets also. Because LCC is very, very strong in the Latin American market, very strong in the African and the Middle Eastern market. So I think it will give us a footprint that we not only didn't have in service offerings, but also in the geographic presence. So overall, a good quarter. Anything you want to add, Milind?
No, you can move to questions.
I think best is to go to questions, and Milind has anyway shared with you, or sorry, Vineet has already shared with you that much awaited bonus board has approved.
But Manish, you could tell us about the margin picture. I think I didn't catch that number that you've given. Margin as well as the components of that, because you did mention that utilization improved the margins, but a large part of it was offset by adverse currency situations. If you could give us the breakup of that, please. So
utilization has improved from 76% to 78%. In terms of margins,
19.9 to 20.1. So it's partly contributed by, as CP said, it's because of the utilization improvement, but there is a cross currency headwind which has taken about 20 basis points. Pricing actually was more or less stable. We haven't really seen. But cross-currency impact was negative.
So cross-currency impact was 20 basis points, and your margins came in at 20.1
as against 19.9.
For a quick clarification, I believe the other income was slightly lower than last quarter. What was the reason for that?
Okay. There was a dividend income on treasury shares on the last quarter, which is not there, but the interest income is the same.
The tax provisions, there has been a jump there.
Actually, tax
provision. On a YOY basis, sir.
Okay. There was a unusual tax reversal in the last year, same quarter. That was because of the, we had evaluated provisions which were made for the erstwhile Satyam, and there was a right back there. So that was, I think, 120 crores plus. So it was on a like-to-like basis, the tax rate is similar.
Milind, the volume growth for the quarter?
Actually, price, as I said, is stable. So whatever you're seeing is a volume growth, really.
Okay, also the attrition, sir, I understand it's a seasonally weak quarter and it is a time when you see attrition spiking up suddenly, but it's at 19%. If I compare this to last year, same quarter, it was around 15%. Can we say that attrition, but this is the case for most of your peers as well, has attrition significantly spiked up this quarter for the entire
country? I would put it differently that the whole industry demands are changing dramatically. As the world moves towards a digital economy, so if my attrition, if I were to see on a quarter-on-quarter basis, it is more or less similar. I mean, my previous quarter was 18%, this quarter is 19%, and the previous year outlook and this year's outlook, I mean, it is just a little more velocity in the market.
There is more velocity in the market.
Yeah.
You're comparing YOY. Actually, see, if you compare it with last year, there was it included the BT amortization. That impact itself is 100 basis points. We had this contractual revenue for payment which we have received, which was amortized over 5 years, and then there has been a wage increase which has been partially taken care of by improved efficiency, but there is also a YOY currency impact which is there. So it's a combination.
What about the BT accounts currently? Can you give more color on that one?
We normally don't comment specifically on a particular customer.
So, okay, give me an outlook on telecom, because that has been flat, 0.6% growth. What is it looking like going forward?
I mean, a lot of telecom business or communication business, I personally believe the demand will only go up. And main reason is what you and I are experiencing it in the market. The need for communication is higher, number of connected devices would be higher, the need for networking. I mean, as the LCC gets fully integrated, I mean, I think our service offerings on networks to the carriers will also increase. So my personal opinion is that communication business will remain one of our growth markets. Enterprise, I mean, we have a lot more headroom. I mean, there's a lot more to be achieved by us. I mean, both in BFSI and healthcare. I mean, so I think we will continue to push the boundaries. And if the two deals, as I said, one deal in the airline sector and one deal in the automotive sector, if we continue to maintain the momentum of the large deals, we should be able to do well in the enterprise business.
If these two large deals were in the $50 million plus bracket or $100 million plus?
They were in
50 million plus.
Okay. Also, as Vineet was initially talking about Europe, everyone seems to be very bullish on Europe. The numbers have shown that in this quarter. What are the areas that you're actually seeing traction in?
I mean, I think Europe bullishness is more because the efficiency, as I said, there are three factors to any business. One is the growth, one is the operating efficiencies, and number third is compliances and governance. What we are seeing is that the operating efficiencies have suddenly become a much bigger thing on the agenda of the European companies, and that is number one. Number two is that there is a lot of unexplored market by many of us. I mean, whether we are in France or whether we are in Germany, the unexplored market is still very huge. So particularly, and number three for us, I mean, Europe has always been a bigger market. So I think, I mean, that's why, I mean, what the comments that you heard from Vineet were more to emphasize that he sees more opportunities in Europe.
You see, also the mindset has changed. Essentially, earlier, Europe tended to do all these tasks themselves, and outsourcing, which came to India largely out of US, Europe was more or less shut down. Now Europe recognizes to be competitive, it has to source the most cost-effective solutions from wherever they are available, and it so happens they are available from this country and from companies like ours.
And we invested a lot in the European development centers. Over the last 1.5 years, we have opened 6 centers in Europe. So that also helps because we have one in Netherlands, we have in Belgium, we have in Germany, we have in Milton Keynes, we have in Ireland. So, I mean, we have one in Budapest. So we also have a lot of geographic coverage.
Is this a long-term pickup or is it probably just a one-off in the next 1 or 2 years and you're actually seeing that coming?
No, this is going to be a trend. I see it as a trend, of course.
Why you're so bullish on Europe? The acquisitions that you made are in the US market, where you obviously want to expand your footprint. Is acquisition going to be one prime vehicle for expanding going forward and for growth?
So interesting statistics. A, SofGen was a European acquisition. Number two, LCC is 6,000 people, roughly. Though it's a Virginia-based company, but their operational headquarters is actually out of Amsterdam.
Nonetheless, US still seems to be the soft spot when it comes to acquisition. Why not go and make a large acquisition in Europe, given that we're seeing so much traction?
I see LCC more as a European acquisition than as US.
Yeah, because the client base is very distributed and their operational headquarters, a lot of work is being done from their Amsterdam office.
So the second part of my